Okay, so we'll get started. We'll get started in about a minute. I know I don't look great. I haven't been sleeping. I've been grinding, homie. I've been working. I've been obsessed with the idea of improving my trading, and I've been obsessed with the idea of doing things a little bit differently than what I've done in the past. So I got some things that I want to share with you guys. Maybe you'll find it interesting. Maybe you won't. I don't know. But I made $12,000 yesterday, and I want to show you how I did it. And then we'll talk about market structure, and then we'll also talk about just some analysis and some things that I bought recently. And specifically, I'll talk about like what I'm doing. I don't think that there's any advantage to not being transparent about my process. So I'm going to talk about that today. How's everyone doing? Everyone's okay? Hopefully everyone had a great weekend. Okay, let's get started here. So first and foremost, last couple of days, last time that I was on, I actually bought Apple, believe it or not. So I thought that Apple was fairly okay price. So I'm going to share with you just some quick analysis on just a couple of things that either I bought or I'm interested in buying. So on the daily time frame on Apple, if we do some technical analysis on this, I know that Apple is not the most interesting thing in the world, but I thought if I'm buying leveraged shares on this, I thought that it would be interesting to hold on to for a little while. I'm not really interested in speculative trading. I'm not really interested in speculative investing right now because for me, I'm significantly down, right? I'm significantly down for the year. I think most people are. But what I've been doing lately, I think is maybe the next chapter of my trading career, right? So I'm just sharing with you guys. I'm sharing you guys in real time, like what's going on. So right now on Apple, we touched back down to 170. So 170 was an area, in my opinion, it was an institutional demand area. I had another area, two of them, that I thought were going to be high interest areas. And then I also had one, this is 145. I'm sorry, I didn't say that. So 145. And I also have one back here at 126. So for the Instagram crowd and also for the YouTube crowd, depending on where you're watching me, I already bought Apple, right? So I bought it a little bit lower than where we are. I bought it approximately at 190, maybe 191, maybe it was something like that. But I bought leverage shares. So I like leverage shares. Now that doesn't mean that it's going to be the right vehicle for everyone because if you talk to a financial advisor, if you talk to people on CNBC or that manage money or hedge fund managers, they're going to tell you that leverage share, anything leverage is very dangerous. And they're right. They're absolutely right. So why would I take leverage or why would I, apply myself with any leverage capacity? Well, I don't over leverage myself. So when I'm looking at something like this, the same thing that I just showed you there on Apple, it's very applicable here. It really is. It's very applicable. So I had $22 as a level of support right here on AAPU. Now, just in case you just jumped on, this is leverage shares on Apple, right? So I don't think that this is really a crazy bet. I think it's a pretty normal bet. $22, and then we hit another demand area back down here at approximately $16.50. So I was very clear, right? I know people are not generally following every single word that I say, but if you're jumping onto our power hour sessions, I've been fairly consistent with this. Not even fairly consistent. That's not even fair for me to say. I've been extremely consistent with if we start overcoming the 5 and the 21 EMA, just using EMAs here. I'm not using anything fancy. I'm going to talk about the fancy stuff that I'm going to do here or that I am doing in just a second. But just the 5 and the 21 EMA stacks, EMAs work very well for the higher time frames. They have between 65 all the way up to 78% when you're in a trending market. So right now, the EMAs showing to the downside if you're using a Fibonacci-based EMA stack. On Apple is very clear that downtrend still hasn't broken. I don't have that Fibonacci sequence EMA stack, so you're not seeing that on your chart. But I want to explain this a little bit further so you understand why it is that I bought into Apple. On the 4-hour time frame, that's my significant level. So I'm going to remove just one EMA. I'm going to remove the 13. So I've said this, and this is generally where I'm looking to buy into positions and hold on to them for a little while. I think that Apple definitely is going to fall within that wheelhouse. The 5 did overcome the 21. So it overcame roughly around $20.50. So I bought into this at $20, right? I literally bought into it at $20. So if we start breaking lower, Well, Sage, Apple can start, trading. It can trade back down to 135. Yeah, Apple can trade back down to 70. Nvidia can trade back down to 50. AMD can trade back down to 20. Tesla can trade back down to 100, right? Our opinions don't matter. I've constantly said this. My opinion doesn't matter. Your opinion doesn't matter. Nobody's opinion matters, especially if you're a retail trader. Maybe if you're more of an institutional trader, or maybe if you trade, maybe you're a professional trader, your opinions are going to matter a little bit more because your footprint is a lot bigger, right? We're not doing financial modeling. That's the responsibility of the institutional traders. So they're constantly looking to do projections. That's how they do their analysis. They're looking at fundamentals, and they're doing quantitative analysis for some of them, for those quant firms. And they're also, obviously everyone knows this, high frequency trading is abundant. But what I can do is I can look at just the EMAs, right? If they're using the EMAs, not using the EMAs, us as retail traders, we're about maybe collectively 5% of the overall pool of liquidity that exists in the market. Maybe not even that. I can at least use technical indicators, which are pretty simple, the 5 and the 21. There's more complexity when it comes to this, obviously. Of course there is. But a lot of the work has been done for me already. I don't need to do fundamental analysis on Apple because the information is already done there, right? It's not that hard. Yahoo Finance or wherever. You already know that Apple is going to be affected by the current policy adjustment, right? There's definitely going to be something there. So if we do start to break again below where I bought in, then more than likely I'm going to be taking off Apple, and then I'm going to look for new areas of reentry. So on Apple specifically, that's probably going to take me back down to that 145 area. On AAPU, which is the leverage shares, obviously that's going to have a double or a compounding effect. Probably going to be back down to $16. If we do trade back down to 16, I'm probably more than likely going to be cutting my position at maybe about $1, maybe $1.50 loss. No big deal. If we trade even lower than the $145 level on Apple, let's go back to that so we can understand the relationship here. On the weekly time frame, I'm just going to use a fib real quick because I personally like using fibs. If you don't, that's okay, no problem. But if I'm going to be honest, I use this extensively. So right now we're at that 0.618 or 61.8% sort of level. We bounced off that level. For me, that's a significant development. If we trade lower, we're back at that 145 area. So I just mentioned that area, right? I didn't pull that area out my ass. I don't do that. I like to trade off of as much data as possible. So the more data that I have and the more confluence factors that I have when I'm layering my data and layering my analysis, those are the points that I'm going to pay attention to. So 145 and then back down to all the way right here. Actually, I anchored this incorrectly, my bad. Let me move it up just a tiny bit. All right, this is in grid mode, so that's why you're seeing it jump back and forth. So, and then level lower is going to be between 130 to approximately 133. Any of those levels, I buy up Apple. It's just that simple, okay? So that's what I'm going to recommend to you guys. If you are noticing these levels, if we do start slipping, and if we quote unquote start diving deeper into a recession, because in my opinion, I think that we are. I think this is early detection of us being in a recession. You know, did you run over the cat with the car? If you already did it, there's no point in saying, it might happen here in the future. You already ran over the cat, or we're already there. The detection mechanisms are there. I mean, there's a lot of things that are pointing to an overall downturn in the economy. If you believe that or not, if you're extremely bullish, if you're extremely bearish, it's debatable, right? That's what CNBC is there for, right? They debate this stuff all the time. But in terms of technical analysis, in my personal opinion, yeah, we can still be pulling back a little bit more. So I'm conscious of that. If we do start pulling back, I don't want to suffer more of a drawdown, right? I've already suffered enough drawdowns for this year. So I'm personally going to wait for Apple to break below where I took my entry, approximately 190. If that were to happen, then I'm looking for those readjustment areas that I just mentioned, all right? So Apple was something that I bought recently. Another thing that I bought recently, which I said I wasn't going to buy, but I got a little bit of confirmation here. So I bought into SOXL, right? This is a 3 times leverage semiconducting ETF. I bought this last time at about $8 and I rode this up to like $40. Okay. So that was the last time when AI was the next big thing. I caught the AI run. I caught the NVIDIA run. I caught the bank run. I caught the China run. I caught a lot of runs. I caught a lot of bull runs, right? I like to do analysis for catching runs in the overall market. So I know we're in a downturn right now, and semiconductors are probably going to be continually one of the most hardest hit things that exist in the market, right? because of policy, because of constraints, because of where we build these things, right? So what I'm thinking here, I bought into this at $9.80. So if we start breaking below about the $9 threshold, probably want to cut my position for an 80-cent loss. Now, what is the upside to this? Upside is pretty good on the 4-hour time frame. What I was just talking about there on Apple, I was looking for specifically the 5 and the 21. That's not going to constitute a squeeze, right? We have no squeezes whatsoever. So the squeeze, all it is a mathematical formula telling you that the Bollinger Bands and the Keltner channels are moving in one direction or another. And then you substantiate that with volume, then you have a recipe for a potential gap up, right? Or gap down. It works in both directions. So what do I have on SOXL for a potential risk reward? In my opinion, we can trade back up to, I would say very likely back up to $16, $17. That's what my price target is for the moment. Now, if we start breaking lower, I don't want to hold and find out that we're going to be trading back down to $5 or $4. I'm already going through this with AMD, right? Some of you guys are going to say, well, Sage is going to come on here and tell us all the money he's making. Well, not really. AMD, I'm losing in my position. I have a substantial unrealized loss on that position, right? So I'm being as transparent as I possibly can be. I have a substantial unrealized loss on AMD that I would like to turn around with doing prudent analysis and practicing prudent patience. I think that probably would be the best approach. I don't think that AMD or semiconductors are going to be wiped off the face of the earth. I don't think that that's going to happen, but they're going through a rough patch. And that rough patch is everything to do not with the technicals per se, or the fundamentals, I should probably say, but it has everything to do with policy. So if policy is affecting overall manufacturing, both here in the United States or internationally, we have to pay attention to those undulations in the market. So what am I saying here? All this fancy talk is to say what? I'm going to be careful with this position, right? Because I bought in at $9.80. So if we break below $9, I'm out, right? I'm out for a, whatever it is, 10% loss. But I'm looking to jump back into the position, provided that maybe the 1 or the 4-hour time frame tells me there's some momentum coming back in. If I have the 5 and the 21 doing what it did the first time that I bought into this, right? So I got in at 980. Actually, 980 is back down here. So I probably took this off the 1 hour. Yeah, I did take it off the 1 hour. I have that, and then I have what's called an inverse head and shoulders pattern. It's not the only technical things that I was looking at, but to facilitate this, because I can use a lot of technical jargon, it boils down to pattern recognition, and it boils down to moving averages. That's basically it. Cool. So anything lower than $9, I'm jumping ship, and then I'm probably going to buy a crap ton of this more so if we trade into the $6 tier. I'm probably going to load the boat, literally. Probably going to load the boat. Probably going to buy a lot of these shares. Okay. Last thing that I want to discuss, and I'm sorry that this might not be the sexiest thing, right? Because I know that retail investors are you're looking to drive the highest amount of return. You're looking for, when I talk about retail investing and when I talk about percentage return, 30%, unless it's from day to night, unless it happens in a single instance, retail traders usually turn themselves off. But I don't think that that's the right way to look at things, right? 30, 40, 50% gain on something that you can buy and actually put a lot of money behind, I think is a substantial way for you to build wealth long term, in my opinion. You don't have to agree, that's fine. But in my opinion, I think that Google, if you look at where they are in terms of valuation, I think that Google is it. So on your daily time frame, I have support right at the 200-day moving average. That's right at 150. So I bought into this around this area. Right. I actually bought into this and I did suffer a little bit of a drawdown, about on Google, maybe 8%, 9%. So I didn't buy more, but I am interested in getting into more on Google. You don't have to agree. You're probably thinking, I want to buy Tesla, or I want to buy something else. I want to buy Amazon. Nothing wrong with that. Amazon, I would be a little bit more partial to, but in my opinion, I think Google is probably one of the most interesting things that you can buy into just going forward. All right, so I didn't talk too much about QQQ and SPY. I'll do that real quick. Let's remove all this analysis. So far, my thresholds on QQQ is 530. Let's see how much time I have. I only have 15 minutes because I want to show you guys some other stuff that I've been doing more on the scalping side. I'm going to spend a little bit of time on that. Okay, so in my opinion, 530 is what I'm watching on, specifically I'm watching here on QQQ. So if we trade back down into this area, I'm interested in buying. Let's actually use the QQQ chart here because I have all the markups. let's get rid of all this busy information. It's quite busy. And let's get rid of the EMA cross. Cool. And let's go to the daily. These are the two areas that I'm interested in QQQ. So I have my boxes here. What I'm interested in is about 430. And then lower than that, if we start trading back down to 410, is likely where I'm going to be looking for buyers to step in and buy up a little bit more on tech, right? I'm very, very, very much interested in tech, but I need a little bit more clarity. I'm already in tech, right? So my position, I think right now it's down about 25 to 30%, something like that. But I am interested in adding to it overall because I'm looking a little bit more long-term. So for short term, those are the levels that I mentioned. And then for SPY, what I'm thinking is basically the same thing. It's not rocket science. It's really not. It's going to be right here. It's going to be where I perceive a demand level. If you use smart money concepts, ICT, Bollinger Bands, if you're using machine learning, if you're using quantitative analysis, you're going to have something very similar, right? Order blocks, whatever the case is. A lot of the trading systems that we use, some of us don't realize this, but there's a lot of confluence when it comes to almost every single trading system. So I'm specifically looking for the 5 and the 21 EMA cross. So right now on the daily time frame, I don't have that on the longer time frame chart. I do have that on the 1 hour. Right? It's definitely there, right? We got it on this 11% move. So it's there. This is a double bottom if you're using pattern recognition. So that's a double bottom, and we're waiting to either test back down into this area. I've said this a few times. Test back down to approximately 515 or back down and make this a triple bottom. If we go for the triple bottom and we are consistently making lower highs, I think we're in trouble. Okay, so that area of interest for me is going to be from 490 to about 495. Okay, that's what it's going to be. So now I'm going to talk about a couple trades that I've been taking. I've been using more quantitative analysis than I've been any other point in my career. I'm moving in that direction. So I've been taking trades. I made 12 grand yesterday, and I'm going to share with you for 5 minutes how it is that I did it, right? So let's talk about that real quick, and then I'll open up the floor just in case anyone has any questions. If you have any questions specifically about a ticker, I will more than glad to go over the analysis. And then I want to talk just a little bit about our newsletter, which has just been phenomenal. It's just absolutely crazy how well put that newsletter is. So let's talk about the scalping real quick. Let's use the right version of this, and let's get that off. Okay. So what have I been doing? What did I do yesterday? I'm going to show you on the 5-minute time frame exactly what I've been doing. So yesterday I took 3 trades, right? I took this trade right here. I took this trade right here. And then I also took this trade right here. Why did I take these trades as opposed to where the little green or where the little red arrows are? Let me see if you guys can see this. Yeah, everyone can see it. Cool. All right, so why did I take those trades? It's basically because I'm using the CVD. The CVD tells me directional cumulative information, but on top of that, I'm also using, this is fairly complex. I don't want to bore anyone to death with the mathematics behind this, but it's going to give me information that has confluence with volatility and also with volume. So if those two things are true, then I'm going to get a signal, and these signals have been fairly accurate, right? I would say probably about 92 to about 92% accurate. So what I mean by that is, well, it looks like some signals didn't fire correctly here, Sage. So what are you talking about 92% accuracy? When I'm talking about accuracy, I'm talking about turns of where volume spikes and where volatility spikes. So when I backtest, specifically for that, it's very accurate. It really is very accurate. So this right here, it prints a signal, but not on the candle close. It actually prints the signal when the candle is still forming. So this on the 5-minute time frame, it will give me that information. So some of you might be thinking, all right, that's kind of interesting. I'm an EMA trader, and I like to use EMAs as, a level of confluence. That's perfectly fine. You can throw the EMAs on here. I'm going to do that right here real quick. So I've traditionally always been an EMA trader. So if you look at where the green and the red dots are, just look at something, right? I find this fascinating. You probably don't care, but that's okay. No problem, right? No problem. There's a lot of nerdy math that comes that is a part of this, but I find this quite fascinating. There is a way that I'm learning that you can actually detect this signal a little bit earlier using volatility metrics. So just notice here, I'm early on the candle by 2 by 2 candles. So about 10 minutes, right? Because I'm on the 5-minute time frame. What about here on this big drop, right? That big drop I actually took yesterday. So I took that and I actually took this right here. So I took that long trade. I have a filter on here. I put it on before I got on live, but it gave the signal. I know it gave the signal specifically because there was a trend analysis right here, and there's also a turn on the TWAP. So the TWAP is giving me trend information. So those two confluence factors, now I'm trading a little bit earlier during the day. I'm not trading so much if I'm not getting a strong signal. So when there's a little bit of a choppy market, I can identify that just using the CVD. I know that the CVD is going to say, well, we're pretty flat here, and maybe I don't want to be taking a trade. But this, what it does, it identifies potential points of entry. It's not going to give you every single clean entry that ever exists, and you're going to be trading and making $10 million a year. No, it's not how it works. No indicator does that. There's no such thing as a perfect indicator. It just doesn't exist. That's why discretionary trading is still very much a factor. So when we're talking about identifying just a little bit earlier, for me, 1 or 2 candles makes a tremendous difference, because how many times do I take a position, then I get stopped out, and then all of a sudden it starts going in my original bias or my original direction. So I'm using a little bit of machine learning and memory, right? So there's a memory calculation in the back end here. So that memory calculation stores information for a little while, and then it tells you, well, what was the activity that happened? Did I perform well on the last trade, or did I not perform well on the last trade? Let me see exactly how I can adapt these calculations in order for me to give a more precise signal. So it builds upon that memory. So what does that mean? What does that mean if you're a tech person, or if you understand math, or if you're interested in trading with a little bit more precision? That means that we can filter out some of the areas where you have tight bands on the ATR, and there's an adaptive threshold element that comes with this. There's an ADX filter, and there's also a ratio filter, right? Won't get into the math. I know that no one cares about the math. We just care about how it works. So I'm going to remove the control, which is the 5 and the 21. And you can see that where the bands are, right? This is literally a visual representation of where the band is. We can pretty much identify exactly where we're hitting that threshold, and we can adapt the sensitivity based on the information that we're getting from the VIX or VXN. So I'm literally real time. Right now this is delayed, right? Because I have to refresh the page. But I'm literally deriving volatility information real time with VXN and also the VIX. I've always traded with the VIX. So this is nothing different than what I was doing before. It's just doing it a lot faster than myself. And I'm getting a signal print right now. So that's kind of cool. So I'm getting all this information real time. I'm identifying what kind of signal generator or computation that I want to use, either if it's a trend, either if I'm using the CVD, whatever, right? So all of these calculations are being done real time. Computationally, it's a little heavy, yeah? So you can adjust this for sure. But the most important information that I want to be made aware of is volatility information and volume information, right? So those two things. If I have that, then I can produce a little bit more precise signals. So how do I know? Just for example, the 3 trades that I took yesterday, I was really pissed that I didn't take the short position right here. I don't know why I didn't take this. Honestly, this would have been a $15,000 trade. So I was kind of pissed that I didn't take that. So I took that trade. I took this trade right here. And then I took this trade right here. So let me explain. Why did I take those? For me, slope matters quite a bit, right? Especially now that I'm going a little bit more the quantitative route. If I'm looking at slope direction, I'm identifying if there is any slope that's being picked up. So here it's very, very minute. I have to actually blow this up, right? So I need to increase the resolution. Well, the resolution's okay, but the slope was detected here. So you see these 3 small, maybe you can't see this on Instagram, but on YouTube you can see it. There is a very, very small little detection mechanism here that's passing through the threshold because it has a look back feature. I didn't even mention this. This is the part of the nerdy stuff. But the nerdy stuff, if I understand what it's doing and how it's detecting, will help me have more confidence in the signals that I'm taking. Do you see what I'm saying? So it detected that slope here to the downside. So you got a signal there for sure. And then it has a look back feature. And that look back feature is going to tell you, hey, out of the last couple candles, the average, the delta, is either positive or negative. So it has an opinion. It builds an opinion. That's literally what it is. It builds an opinion. So I started putting slope information in my calculation. So that slope is what derives the signal after hours. Now, obviously, this is a flat CVD. There's not a lot of volatility going on, right? We understand this. But we also had an identification of the slope right here. So slopes are important, right? It tells you trend information. That's what it is. So right when we got on this candle, when there was an overall an overall calculation that this delta hit when it hit the tape, it was like, uh-oh, let me fire on the signal. So it's taking the average of the last 5 or 10 CVD candles, and it's telling you, well, there is a huge shift in volatility and momentum. So that's why I was able to detect that candle fairly early. I got into this candle, I can't remember exactly, I have to look at the activity, but I got in this candle approximately there. So it was almost the perfect signal. And where was I tagged? I was tagged on this trade right here, right? Because I was tagged when momentum started to shift in the other direction. So that's how it is that I'm detecting signals just a little bit earlier than the moving averages. So that's how I'm doing it, right? That's literally how I'm doing it. And how do I know to filter out, like, for example, why didn't I take this particular trade? Because in my opinion, for my eye, I didn't detect a very significant slope to the downside until we got to this candle right here. So I obviously see a very clear signal, right? This is an incredibly good signal. This signal would have doubled my profit for yesterday, which was already very good. So I'm a little bit annoyed that I didn't take that. But if I'm using the logic that I'm trying to explain to you, if that slope is not there, then I have less confidence in the trade overall. But that means that the accuracy of the detection is very good. It is extremely good. And I think that I can improve upon this even more. I think that I can actually improve maybe 20-25% of the detection mechanism. So there is a little bit of an aspect of machine learning. There is a computer. There is literally a computer. I know that that's kind of weird to say because, of course, I'm on a computer. But there is a brain. I should say brain. Brain is probably the right terminology. There is a brain that gives you real-time information and does calculation that is adaptive, depending on the information that it's getting from volatility or from volume. So that's how it derives the signals. And honestly, I think that this is already leaps and bounds ahead of what I was doing before, which I was just using moving averages and I was just using some sort of oscillator, right? I think that this is a little bit more precise and a little bit more quick and adaptive in making those calculations. Now, you're going to see in tight areas where there's a lot of turns or where there's a choppy market, you're going to see signals all over the place. How do I know how to filter that? I've already fixed that problem. You put a bandpass filter, which is an audio term, but basically it's the same thing as an ADX filter or a ratio filter. So I can filter out for low CVD environments. It's not that hard. It's actually not that hard to do at all. So there it is. The hard thing is detecting what signal is more qualitative as opposed to just quantitative based. So we need to know what we're looking for, right? So if you don't know what kind of signal produces a quality signal, if you don't know how to reverse engineer that, then this becomes very difficult. But thankfully, I have a lot of trading experience. I have 10 plus years of trading experience, so I know what to look for. And that's how it is that I'm trading, right? This is what I'm using to do some detection. So I've just explained my process, right? I'm still developing this, and I still want to make this even better, although it's already pretty good. But I'm very interested in perfecting the bands, and I'm also very, very, very interested. I don't even know if I should say this, but I'm interested in having it have an adaptive feature based on time frame and based on what kind of trading style that I want to do, whether I want to do swing trading. So the calculation is going to be a little bit different. I don't have to be as precise. And then I also have a scalping profile. So the scalping profile, the ATR bands are going to be tighter, right? Because you have quicker turns and you have more noise that's introduced into the trading system. I'm working on that. And I'm excited about that because if I can get that right, on the higher time frames, if I'm doing 30-minute time frame, let's see if the adaptive feature is going to be working here. If the higher time frames are right, then I can catch significantly bigger moves, right? Significantly bigger. So right here, have a correct signal. Right here, I have a correct signal. Right here, I have a correct signal. Here, I have a little bit of chop. That's okay. Get stopped out here on 100 points. And then after that, catch 1,200 point move. I'm good with that, right? So that's just the 30-minute time frame, and I can still improve upon this. But overall, just looking at a little bit of accuracy here, it's pretty accurate. It's pinpointing the trend information, and it's doing so, I think, at a higher level than I would be able to do just with the moving averages and with the TTM squeeze. Cool? All right, so I killed the 30 minutes here, so I apologize, guys. But if anyone has any questions about what I'm doing, I'm being very transparent with my process. I don't like not being transparent. I don't think that helps anyone. I think it really helps talking to people, especially in times like this when we're losing a shit ton of money. talking to people and being transparent about what you're doing, because you need to understand how something works for you to have confidence to put your money behind it. So that's where I'm working from. So if I develop something and I say, I have no confidence in taking the signals that the generator is giving me, then why am I even building it, right? There's no point to it at all. So that's where I'm at, right? This is where I'm at in my trading journey. You guys are seeing it real time. It'll be fun to look 6 months down the road and see exactly how far I've come with what I already perceive as a pretty decent system. I think it can be improved upon significantly, but this is where I'm at. Also, if you are interested in updates that we have for market regime, for just market conditions overall, please consider our newsletter, right? I read the newsletter every single day or every single time it comes out because there is extremely good information. I don't write it, right? I've been asked, I've asked to be part of the writing process, but I think they have smarter people than myself that are giving me up-to-date information. So it's very concise, and it gives me a really, really good professional breakdown of things that I need to pay attention to in the market. I'm actually using it in order for me to build my watch list and build things that I just want to look for in the market. So every time it comes out, I'm like, there's something interesting that I didn't think of, or this is a different vantage point. So if you guys are interested, click the link in the bio. The newsletter's free. It's totally free. So make sure that you are a part of that. And if you have any questions, just let me know, people. Let's see in the comment section. Also, if you feel that you've gained something from, spending some time with me today, let me know in the comment section. Either give me a thumbs up and say, Sage, our time together is well spent. And I think that, I'm actually learning and I'm seeing exactly what you're doing. And there's no black box, right? There's a concept in for developers where if something is black box, you can't really see what's in it, right? I don't like that. I like to keep it white box. I'm not going to share with you the code. Obviously, I'm not going to do that, but at least I can share with you how the code works and how it makes its calculation for us to be more confident in the signals that we're getting. So if you feel that your time here was well spent, give me a thumbs up in the comment section. If you don't, give me a thumbs down. That's okay too. That's, it's feedback that we always use in order to improve our sessions and improve our services. So what do we got, guys? What do we have? Sweet. So no questions here for today. All right. So we just have listeners today. That's all good. Wow. Let me see. Wow, we don't have a single question. That's strange. I usually get a couple questions. Let me see what we have. I have maybe about another 2 minutes and then I'll hop off. So when should I jump into SPY at what point? I would recommend watching the 5 and the 21 cross as I explained in today's session. Okay. Yeah, today I was a little bit more nerdy. Today I was talking a little bit more of concepts. Okay, I think we're good, everyone. Cool. How much longer for me to refine? I need to do more back testing, and I need to have something where if there is a signal that's generated, I have to understand why it's generated. And then we also have to do some forward testing. So when I said that there's a machine learning component to this, that's not a marketing term. I'm not a marketer. I'm a trader. Okay. Marketing is not my thing, but, there is a machine learning component to this. Can it be improved? Yes. But I also need to buy a server, and the server is about 25, maybe 30 grand. I need a server that does the computations on the back end that I can connect to my computer, which my computer doesn't have the horsepower enough to do real-time machine learning. And TradingView for sure does not have enough computing power. But I want to get it to a point where the brain on a standalone is sufficient enough for you guys to use without needing a $25,000 computer. I want it basically like this. So in terms of refinement, I think the refinements that I'm going to get done today, because I have some code that I need to review. I have maybe about 4 or 5 bugs that I need to review. For refinement, more than likely, I'm going to have that done in 2 weeks. Now, for back testing, I want to do some significant back testing because right now I'm doing 1 to 3 micros. But I would like to get to a point where I'm confident to do 5 to 10 micros or just one just one mini, right? One mini, two minis, three minis. That's $60,000 per position. So when I get there, maybe that's when I say I'm done. Now for time frame, probably about a month to maybe 2 months in order for this to be off the ground. But I still need to do significant I use Quant Connect, right? Because I have to translate this into Python because right now it's in PineScript. But the entry criteria is funny because if I set it statically, then I get certain results. But I can actually get better results if I do discretionary trading because I can visually see the chart and I can see where to adapt my stop loss or where to trail up my stop loss based on the trend information. So this is something that I didn't talk about at all. But you have two calculations when it comes to trend. You have the TWAP, which is adaptive as well, which is a feature that I'm going to include in the new version of this. So there's an adaptive feature, and there's also an adaptive feature with the threshold. So if I can get my back testing to also include my discretionary decision making and have that to where I wanted to be at, then yeah, I think maybe in about a month to 2 months I can have this off the ground. So that's what I'm thinking for time frame. I need to also, yeah, I do need to do third party to make sure that my calculations actually make sense because there's computational overload, right? I need to make sure that the memory is being cached correctly. And I also need to make sure that my calculations are up to par because I want this to be, I want this to be my thing, right? I don't want the computations because of my dumbass did something wrong and then something is triggering and it's not firing the signal. I happen to know that the calculations are done to precision, but I want to get someone that is a million times smarter than me to overlook the code and overlook the calculations just to make sure that it's being done correctly. Because I'm stupid. I'm a stupid person. But if I can get someone that actually looks at code and actually is a real developer, because I'm not a developer, right? I'm a trader. That's what I am. I'm a trader. But if I can get an actual professional developer to look at the code and say, all right, this can be optimized here and there, and those optimizations provide the proper results in the backtesting, then I feel that at that point, I'm going to have confidence in saying, all right, I think this is ready. Does that make sense? I can host a ML model on a cloud server. I can. It's going to be very expensive. I thought about that because obviously I don't want to buy a $25,000 server for me to host it at home. Obviously the cloud is specifically built for that. That's the whole purpose of the cloud. But I don't want that bill because I've done a little bit of the backwards math to that. It's going to cost me way too much money in overhead. So I want to keep it computationally simple enough where it doesn't require too much overhead and it doesn't require too many significant calculations. Also, this is, if you guys, maybe some of you guys don't realize this, but this is a little bit of how high frequency trading is calculated, but they do it on extremely short time frames. They're doing it on the 5 second, 10-second time frame. For us on the 5 minute or the 10-minute time frame, the amount of precision doesn't need to be that much. You see what I'm saying? I can be 1 or 2 candles late and I can still catch a significant move. So there's trade-offs, right? There's definitely a lot of trade-offs. So if you're saying, I want to be pinpoint accurate, precise, but my overhead is going to cost me $5,000 a month, I don't want that. So if I have something that is almost 80 to 85% accurate, and for me to improve 2 to 3%, I need to spend X amount of dollars hosting the calculation mechanisms on the cloud, I don't think that trade-off is worth it for me. See what I'm saying? I think that I have enough experience and I can educate people enough on how it is to use something like this where all they have to do to fix your problem, you have to go into the 10-minute time frame, right? Give up the 3-minute time frame. Give it up. And then if you trade off the 10-minute or if you trade off the 15-minute, all your problems go away because this is going to be sufficiently intelligent enough for you to say, all right, I have confidence in taking it and I'm going to be stopped out every once in a while, of course. Obviously, we're going to be stopped out. But if we have right risk management and if we're looking at RR, then this is going to help us significantly. See what I'm saying? So yeah, I did think about implementing it on the cloud. For sure I did. This has nothing to do with the bag indicator. This is completely different. This is every trader here has their own way of trading. And this is not, it has nothing to do with what Kyle is doing or nothing to do with what Shane is doing. Each trader has their own way and has their own little system. So it's 3 different little universes. This has absolutely nothing to do with the computations behind how BAG works, right? It is literally constructed entirely different. So depending on what kind of trading system that you want, if you understand how the trading system works, that's what I would say you should gravitate towards. So if you're more EMA based, if you're more quantitative based, if you're more volatility based, if you're more whatever trading style that you identify works for your psychology is what I would say you should be attracted to. The reason why I say that is because there's probably a good legitimate 500 ways to make money in the market. There really is. There's about 500 really, really good trading systems out there that just are different nuanced variations of those trading systems. So it really depends on what kind of person you are. If you prefer a specific type of calculation, if your mind works a specific way, then, adhere to that. So on the bag, I don't want to speak for it, but it works computationally very different than what I'm discussing here. It really is extremely different than what I've discussed today. So it's a matter of you weighing your pros and cons and seeing, right, you guys having a quantitative assessment of what's going to work for you and what performs a little bit better under certain market conditions, and then you make an assessment from there. That's how that's how a big boy or a girl would do it. So that's what my recommendation would be. All right, what else we got, guys? Any other questions? Cool. All right, today's session was loaded. I know we went over a lot today. Don't forget the newsletter. Click the link in the bio. Please sign up to the newsletter because it is a phenomenal newsletter. I'm going to be working on some stuff here. So on Thursday, I'm going to be jumping on. I'm not going to talk so much about this nerdy stuff. I'll talk more about where we are in the market because I know most people just want to know. Tell me where to buy, tell me where to sell, make the decisions for me. That's basically what people want. So we'll do some of that as well. But just know on the back end, a lot of work is being done in order to improve on our overall analysis for us to make more concise, more data-driven decisions, more so than what we've done before. Cool? All right. Thank you so much, guys. I appreciate you, and I'll see you guys in the chat.